Hi, I'm Mehdi Sunderji, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets, where there's always something to talk about. But before we get into it, don't forget to like and subscribe to stay on top of our content. We are through 4,000 subscribers, so thank you very much for all of your support out there. Adam, how are you, mate? Welcome back.
I'm doing good, Mehdi. I'm actually on location today. I'm in Austin, Texas.
I was about to say, a little birdie tells me you might be in the thick of things right now. So where are you? You're in Austin, Texas. What brings you to
Austin,
Austin, Texas?
Austin, Texas. This is the Permissionless II conference. I attended Permissionless I last year, which was in Palm Beach, Florida, or West Palm Beach, I guess. And this year, Austin, Texas. Permissionless put on by our friends at Blockworks.
Fantastic. And, as always, I've got to ask, any salient points or anything that came up that you'd love to get out to the viewers?
Yeah, this was actually a very the conference kind of the mood was very much different than last year. Last year, the permissionless conference happened about a week after the Terra Luna collapse. So it was really interesting to be there, but I think I remember telling you there was still so much positivity, right? It was kind of like that, awful collapse happened. We're still here. DeFi still exists. Those protocols still work. That was kind of the feeling last year. And it was we're going to go on in spite of what happened. And if you remember last year also, I think I told you that Do Kwon himself was actually supposed to be on the stablecoin panel. And the fact that he wasn't there actually, I think, made more people want to go listen and hear what the other kind of stablecoin mavens were going to say about it. So last year's was a lot of this conference was a lot of DeFi protocols. There were still NFTs hanging out there, and again, it was very kind of exuberant. This year, Mehdi, seems to be very different. We're seeing a lot of institutional interest, a lot of institutional opinions here. So we're talking quite a bit about, quote, real world assets on chain. We've heard here from the likes of Visa and PayPal and JP Morgan and those kinds of companies here talking about how they're tokenizing assets, talking about how Robert Leshner of Compound yesterday, kind of said, look, the institutions aren't coming for the native crypto assets. The institutions are coming to actually utilize the blockchain technology. That's what's going to have to happen first, and that's going to drive the value. And so that's really, been what I've kind of witnessed here is it's about the institutions are coming, but they're coming to actually use the technology. They're not necessarily coming just to invest in Bitcoin and ETH.
It's very interesting you say that. I also attended a small conference here in Connecticut, the Connecticut Crypto Conference or Crypto Forum, and the speakers were all institutional focused. There was funds. There were obviously some of the names that are listed, and that was the overwhelming kind of message that was being put out there. It's not a speculative asset that we're looking at, or any type of or not just Bitcoin, but any of the others. They really care more about the underlying technology, especially around the blockchain side of things and the applications for the bigger picture within the financial industry. So, very interesting to see that being echoed on your side as well.
Yep, that's exactly kind of the mood here. And from those that are the more kind of DeFi or decentralized native, it kind of dampens things a little bit, right? Because those are the people that were looking forward to this kind of overtaking of the financial system, and now to see all these kind of incumbents saying, "We really like your system, we want to come play." And the system being decentralized, it's not like they can block them out. No pun intended. It's kind of the system welcoming them and going, look, use it for what you will. That's what it's here for. It's open, it's decentralized, the code is out there, it's open source. Go ahead and use it for what you will. And a lot of these institutions, the likes of BlackRock and JP Morgan are saying this is going to make us more efficient.
Efficiency seems to be the key, that's for sure. Well, while you're in Austin, it made sense to kind of kick off with a Texas story. I don't know if you saw last week, but there's a bit of a heat wave going on around you know Texas and other parts of the country.
Right.
But Texas has kind of taken a little stance with the Bitcoin miners and asked them to take a little chill pill and maybe lay off some of the electricity usage. So, was there any chatter around that? Do you think that's going to impact Bitcoin prices? Oh no.
There was not a lot of chatter around that in particular at this conference, but I do know what you're alluding to, and it's that the Bitcoin miners, you know, in their idea, they kind of saved Texas. You know, they saved us from. I still say us saved the Texans from having to turn off the grid, turn off the power, you know, during the worst heat wave the state has ever seen. But you know, I can go into it a little bit more. I saw where Riot Blockchain, which is one of the largest miners and you know a publicly traded company, I think made something like $31 million 1 month, just you know basically from the state for turning their miners off.
Wonder how that compared to how much they were making from Bitcoin mining.
It was actually much more than they made from Bitcoin mining that month. But I wanted to go into it a little bit because I did see some people on LinkedIn and on Twitter and such commenting on it about how you know they feel it's wrong that now these Bitcoin miners, you know, they use all this Texas electricity and then they get paid even more to turn their miners off. But let me explain to you what's actually happening here. The reality is the miners like Riot, the big miners like that. Marathon isn't here, but others that are here in Texas, they are actually creating more power than there was. So for the most part, the power that they're using is not coming from the Texas electric grid. They are creating that power themselves. So they have access to natural gas, they have access to natural gas generators, and they're generating their own power to power their Bitcoin miners. And the kind of subsidies or the tax breaks they've gotten from the state are such that, look, guys, when we have issues with the Texas power grid, we're going to ask you to turn off your miners and sell your power back to the grid. Texas has deregulated energy, which is why so many miners come here. You can kind of make your own price and you can make your own energy if you want to. So at a time when the Texas electric grid is taxed, like it has been this summer, and I don't mean taxed financially, I mean taxed like it's about to shut off because there's not enough power, all these Bitcoin miners that are generating power that normally would not have gone into anyone's homes are incentivized to turn off their miners and sell that power back to the electric grid such that those that are dealing with 106-degree temperatures don't have to turn their air conditioning off, right? So it's new power that's being generated, not being used by anyone for their homes until such time as it is absolutely needed by the grid. And then those miners have to turn the power, their miners off and sell that power back to the electric grid. So Riot Blockchain didn't get some subsidy from the state for turning them off. They sold their power back to the electric grid such that the grid didn't have to shut down. So that's part of it, is they're making power, they're making electricity where there wasn't any before. And so it's not like they're sucking power from the Texas electric grid. They're creating their own. It just so happens they can at some point decide we're going to be a power plant just like a lot of other companies, and we're going to sell it back to everyone else that they can use it in their homes. In that way, Mehdi, many of these claims of Bitcoin being environmentally unfriendly are just not really, they're not really accurate. It's actually companies like Riot creating more power out of pretty clean natural gas and then helping the grid at a time like this when Texas really needed it.
It's a very different story that's being portrayed by most of the headlines. So thank you for clarifying that there, Adam.
Exactly.
So, well, okay, so we've seen some mining operations being put on pause or taken offline for a period. There's other sources of crypto coming though. Our old friends at FTX, it looks like they might be offloading billions in crypto, something like 3.4 billion. That their assets will potentially be sold off over the next several weeks or months. I believe the decision's being made today. From what I understand, they're looking something like $200 million clips a week until those assets have been sold to the market. Do you think this will have any pressure on assets and let's talk Bitcoin or any of the others? Like, do you think this is going to be an impact?
Well, it looks like it already had a little bit of an impact, right? We had a steep drop, I believe, on Monday. It's hard to tell, when we're at these conferences, what day it is, but I believe it was Monday. We had a pretty steep drop when it came out that FTX, through the liquidation or through the bankruptcy was going to start selling, a whole bunch of their tokens that they had. And of course, the market, being the crypto market, reacted quickly. And when we see the crypto markets react, it's usually out of really not understanding, of kind of a lack of understanding what's really happening. Now, we are going to find out, I think you're right, today, how much they're going to sell and how quickly they need to sell it. And I think that we saw the crypto markets fall initially and have kind of come back up. And I think part of that, Mehdi, is a realization that FTX and the liquidators are not going to sell all, whatever, 3 billion or something tomorrow. It's going to be anywhere from 100 million to 200 million a month. And it's going to take quite a while to sell all this. And the whole point of it is not to dump 100 million on the market, September 1st or October 1st or whatever. It is to sell it over the entire month such that they're getting the best price that they can get at that time. So yes, there is going to be somewhat of an impact, but as it's being sold slowly, my guess is the market will be able to absorb that, right? That there will be people in the market able to come in and snatch up those crypto assets, such that it's not just going to dump 3.4 billion or what have you on the market.
Well, depending on the mixture of those assets, if there's a heavier weighting on Bitcoin and ETH, as you kind of assume there probably is, we're seeing ARK and 21 shares file for the SEC for a spot ETF and Ether as well. We've got Franklin Templeton also filed for a Bitcoin ETF. So all of these ETF applications, if they start getting approved, let's say over the next several months, they're going to need to go buy the underlying asset as well, whether it's ETH or Bitcoin. There could be some market conversations there or off-market conversations there versus dumping it on the open market and then someone having to go back and buy it, through normal open market participation.
Right. That's a good point, Mehdi. So there might be some kind of backroom dealings between whoever gets their ETF approved and the FTX liquidators to say, well, we'll take it off your hands. It doesn't even have to go to the market.
That I assume would get washed through the likes of a Coinbase because they're probably the best position to sit in that universe of, we'll help you offload these FTX assets and effect,
Right.
it's like old school crossing stock in the equities world where you find a buyer, you find a seller, and you put the two together and you take a little commission. So we might see some of that starting to come to play.
I agree. And as you pointed out, Mehdi, kind of exciting that we've seen the first ETH spot ETF application coming from ARK and 21 shares last week. And now yesterday, Franklin Templeton jumped into the Bitcoin spot ETF race with their own application, which, again, Franklin Templeton being a multi-trillion-dollar asset manager, kind of like we've said with BlackRock, they're not jumping in unless they know something, or they've read what happened with Grayscale. They've looked at all the regulation that's come out. They looked at what the SEC is doing, and I have to imagine, just like with BlackRock, that they kind of know something or they feel something. They have a good idea this is going to happen. It's worth our time and effort, and we're not just getting in here for the FOMO. It's because we feel like there is a real viability that there will be a spot ETF approved, and we don't want to get left out.
So I agree with everything you're saying on that. And now, as we kind of like put our regulatory hats on, we've had a couple of different pieces and almost conflicting pieces of regulatory conversation coming out of DC. So there was a CFTC commissioner, Caroline Pham. She outlined a time-limited program to start allowing regulated crypto markets and tokenization. And she's kind of saying this approach has precedent. So she's put together a very well thought out, structured pilot program for US crypto regulation. That's one side. First of all, let me allow you to address that. What are your thoughts on that? Do you think that she's got weight within that, and do you think it makes sense the way she's looking at things?
I do. I think when people like Caroline Pham, Commissioner Pham, put out ideas like this, it is well thought out. It is, let's take the innovation that crypto brings us, and let's make sure that we have a good path towards it, and we don't just keep regulating by enforcement, doing those things. Let's create this pathway to get to some sort of regulation that keeps people safe, keeps investments safe, but allows us to innovate and have these financial products. So I like the direction that she's going with it. Again, it is kind of just a proposal right now, so it's not like this is going to be implemented today. It's just a recommendation of a pilot program, and I hope it gets approved, or I hope it at least gets discussed enough that maybe it can be augmented a little bit, or maybe it can be changed up a little bit, and we do realize there should be this pilot program, and maybe it should be with CFTC and SEC, and they should be going through, down these regulatory rails until such time as we get real legislation from Congress.
So that's one positive. On the flip side, on the news flow, is out of the Senate Banking Committee chairman side, Sherrod Brown. So Sherrod Brown would need to get on board for any crypto legislation to move ahead. He's also been highly critical and encouraged Gensler to, he's been digging his heels in on this crypto side and almost using Gensler as his mouthpiece or the front facing of
Right.
their thoughts on what's coming out of the banking committee. So how does this all work? Like, these guys still need to approve before the CFTC kind of pilot program could even start trickling through the system.
Yeah, that's my understanding, and I'm not versed enough in what happens in who gets to approve what in terms of the regulatory bodies versus the Senate or Congress. I'm definitely not versed enough in that to know, but I know that Sherrod Brown has, obviously chair of the Senate Banking Committee, carries a ton of weight and has been notoriously relatively anti-crypto. And this gets to what we've been talking about, Mehdi, for I don't know, the last few sessions here, is at what point are Gary Gensler and the thoughts and ideas around crypto a political liability going into a pretty monster election year? And I'm not sure if Sherrod Brown is up for re-election, but but it'll be interesting to see at what point all of that becomes a political liability, or do they go, you know what, we're going to start allowing more crypto to come? Because if we go back to the beginning of our conversation and what's happening here, permissionless, and what you saw at your conference is these institutions coming in and utilizing the technology. Now you have the likes of BlackRock and JP Morgan and Bank of America and Northern Trust actually utilizing this technology, but they will all say, we would really like some clear regulation for us to really move forward with it. And we have a whole lot of money to contribute to campaigns if you will allow us that regulatory clarity to go forward with this, because it could mean a great deal of efficiency for us. So is digging their heels in on crypto worth that political liability, right? Is Sherrod Brown really backing Gensler and using him as a mouthpiece worth that political liability going into an election year? And I think that's what we're going to have to see, is how much are they willing to dig their heels in, and at what point are the voters going to say, look, I need you to start being more innovative. I need you to start allowing more innovation here. I need you to start letting crypto go and do its thing, and I'm willing to speak with my votes.
So I guess all these things are going on. We've got a couple of different things going on, right? We have a track of people bringing in innovation. They're trying to build on blockchain. They're trying to utilize crypto assets and their businesses, bringing DeFi into TradFi. All this stuff, good stuff's going on. We then have regulation, which seems to be a complete jumble and mess. We've got CFTC trying to be productive. We've got the SEC being headwinds. We've got the Senate Banking Committee doing their own thing. So we have good, we have mixed, and then we have kind of the reality, which is unfortunate because there's an underlying issues which have been there from day one, where everyone sits there and says, "Oh, crypto is only good for nefarious utilization." And we saw, I'm trying to remember, I can't remember her name, the crypto queen behind OneCoin. This was a couple of years ago now, who it was a massive fraud. Her, I guess number two or whoever it was, I think he was sentenced to 20 years yesterday. So we're now seeing, obviously the people actually start getting put away for jail, which is great. They're getting busted and it's being dealt with. We're now also seeing things like the Winklevoss versus DCG Silbert's ongoing case. There's a dispute. FBI agents, SEC staffers, New York City prosecutors have all sat down with Winklevoss, with the twins, Winklevi, about allegations of fraud levied against DCG Silbert, right? So uh, there's progress, there's headaches, and then there's just like this overlap, this again, then this gives people the ammunition of, oh, see, there's always fraud going on in this thing. So, where do we sit with this? Like, is this DCG Silbert thing? Is this a big deal? Like, how impactful can any of this be?
Look, I think the DCG versus Winklevoss versus the Gemini thing, it's a big deal because the Gemini Earn product had, I don't know, some like $1.5 billion that DCG apparently owes them, which goes to regular investors, right? People who had money in Gemini Earn that went through Genesis and DCG that is now no longer there, or was not available anymore when Genesis went down because of poor risk management, and FTX and everything. And then and this is Gemini and the Winklevoss twins trying to get that money back to the investors, the people on the Gemini platform. It's a big deal because and it's a big deal that more and more people are kind of going to jail or getting caught, and we'll see what happens with the SBF. I hope he goes to jail for a really, 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 really long time and does not get access to a laptop while he's there. And I think it helps people a little bit. And again, that's my kind of biased opinion, is it helps to go see, even though these people were committing fraud, they're still going to real jail. Like, they're still going through real court. And when money is owed, even though it's in crypto, when money is owed, we still have laws, right? We're still a nation of laws, and those laws are still going to take care of things, just like we've talked about in recent weeks, Mehdi, with court cases, with Grayscale versus the SEC, with the SEC versus Ripple. It's the courts now coming in and saying, we're going to help adjudicate this. We're not going to create the laws, but we're going to enforce the laws. And as much as those that are anti-crypto say, see, there's all this fraud, look, there's so much more fraud in the traditional financial system, and always has been. It just isn't as headline grabbing, right, as crypto. Crypto makes it a little bit easier because people like OneCoin were able to raise so much money so quickly for a blatant fraud, and it was because everyone just wanted to make money quickly. Everyone was going, I want to invest in that coin because I think it'll go from $1 to $1,000 really quickly. And they didn't know anything about it. So it was very easy to perpetrate frauds. But now we're seeing those people go to jail. And it's just unfortunately, it's part of the cycle, right? And getting those bad actors out is a fortunate/unfortunate part of the cycle, where I think some of the people that are looking to get into crypto, like the banks and such, are going, all right, we feel like we've gotten several of the fraudsters and scammers out, and we've understood what the scams and the frauds are, so that we can look for them the next time, so that we can make sure, and people are getting more educated on them, so that we can progress the industry and progress the technology with this understanding of, okay, I know what to look for when it comes to frauds and scams and such, and I'm not going to fall for things just because someone promised me 1,000x.
Well, I think you just nailed it, Adam. There's two factors here. One is education. I think people are starting to get slowly more and more educated. There's obviously a place to go if you're a registered investment advisor and you want to try and get some education. I think I know someone. Put your hand up, Adam. So, yep, there we go. But there's the education side, but the other side is, there might not be full regulation around crypto and crypto assets and everything, but fraud is fraud, and it's as simple as that. That's breaking the rule of the land. If you get busted, you're going to go to jail, and this is what they're proving, and they're now following through on. So very apt points. Speaking of apps, a quick application kind of commentary. We haven't had any fun stuff over the last couple of weeks. It's been kind of regulatory heavy and such, but Google's now allowing ads for NFT gaming or games starting, I think, at the end of this week. The new updates to this cryptocurrency ad policy is going to allow for NFT gaming ads as long as the games and ads don't promote gambling. So this is a definite step in the right direction. This is again, I think, also Google turning around and saying, all right, we haven't allowed this for the last, I think it was something like 4 years. Maybe they didn't allow any of this type of stuff. So they're coming around to the fact that this is here to stay.
Yeah, I think you're right, Mehdi. I think they kind of looked at it, right? Because originally between Google and Facebook and LinkedIn and everyone, I mean, you saw a ton of crypto related ads, and it turned out, a good number of them were frauds or scams. And so all of those platforms just completely shut down anything crypto related from an ads perspective. And Google, I guess, has taken their time and gotten their arms around it and said, here's what we feel comfortable allowing in ads, and here's what we don't. And I'm guessing they're going to be pretty strict, and I think they're probably going to be pretty quick to take things off if they feel like it's being exploited, if they feel like something is gambling or fraud or scam or something. But I think that you're right. This is important for the market, for the NFT and for the larger crypto market, to be able to have, NFT gaming ads in there, because people want to learn about it. People want to get in on gaming. People like gaming, of course, and so much money from the VC ecosystem has flown into NFT or crypto related gaming. And so, I think it's Google One saying, look, there's a lot of ad revenue for us here. But again, taking some steps back and going, how can we make this safe for people so someone's not using our ad network to be able to scam or perpetrate a fraud or something, or get people to gamble. How can we move this in the right direction? And I think it's a good step for Google. I think it's a good step for the crypto, the blockchain, the NFT community, that now they can start advertising and maybe start to get some more applications out there, and maybe start to get some more adoption of at least kind of the NFT and the blockchain based gaming.
Well, looking forward to seeing some of these ads. Adam, as always, thank you so much for your time today.
Thanks for having me, Mehdi.
And I touched on it earlier, but education is definitely a key that everyone is focusing on more and more. I genuinely would urge our viewers to check out Adam's course on digital assets and crypto education. The link's down there, interaxis.io. Please check it out. It's just check it out. You'll learn something. That's the whole point of it. And of course, don't forget to subscribe to Your Finance TV. Get it done. We'll be back next week with more about crypto revolution. Until next time, thank you for watching and good luck investing.